I'm just going to go through some dot points. The US and other countries have been reluctant to get directly involved within the conflict for fear of escalating it further. So we've seen that, and I won't say the US are trying to play it down, but what they're trying to do is say, we're going to stay far from it. We're not going to be active participants in this. Ukraine is not a member of NATO, and as such, NATO will not deploy their troops to assist. Countries have given funds, ammunition to assist with the fight. Australia yesterday pledged $70 million US for lethal aid, meaning funds can be used to purchase ammunition or to send ammunition, which they will be doing. The EU as a bloc have confirmed assistance in both financial and military. Individual countries are now providing military support, including countries that have been seen as neutral. So countries such as Switzerland, that have always, well, I won't say always, but have been neutral and have prided themselves on being neutral, are now starting to assist. Countries that have been passive since World War II, and that's Germany, are now starting to get involved as well. So Germany now has agreed to bolster its own defence spending up to 2% of GDP. For years, they've been below this. So many of the other countries in Europe have been 2% or higher in GDP on what they spend on defence. Germany has been considerably under this because they've been passive in relation to conflict based on what's happened previously in World War II and so on. What we've seen is that there's been heavy sanctions placed on Russia from both US and Europe, and these are now starting to play out. And with these sanctions, there have been, all people in the US and European Union are banned from trading with Russia's central bank. The sanctions also apply to Russia's finance ministry and its sovereign wealth fund. The US and its allies are looking to squeeze Russia's economy and make it very difficult for Russian leaders to access money, which they've been able to do. And as a result, you saw, not yesterday, but the day before, on Monday, you saw that Russia increased its interest rate from 9.5% up to 20%, just overnight. And at the same time, they've kept their stock market closed over that period of time. So they haven't opened it as yet for fear of contagion. And what you've seen in Russia is you've seen that people queuing up looking to get their money out of banks. At the same time, private businesses have joined governments in isolating Russia. Facebook, Google, YouTube have announced plans to stop Russian state media outlets from monetizing off their platforms. So we've seen that happen. Twitter's been involved as well. Oil giant Shell has said it plans to dump a joint venture with Russian gas giants, Gazprom. We've also seen the same with BP, and BP were the first ones to announce, I think, about 3 or 4 days ago. The banking restrictions are arguably the most serious form of economic retaliation yet approved by the Western powers in response to Russia's attack on the Ukraine. They're aiming to prevent Putin from using his sizable financial reserves. Those financial reserves are up to $600 billion US. So that's what they're looking to do. The sanctions have also targeted members of Putin's inner circle and other business leaders in Russia. So they're putting the squeeze on the wealthy in Russia who can influence Putin to actually pull back his troops. That is what they're doing. Is it working? You're starting to see a little bit of agitation there, but I think they've still got some time to go. The cost: more than 500,000 people have fled Ukraine to neighbouring countries, according to the UN Refugee Agency, setting off a refugee crisis in countries such as Poland, Moldova, and the likes. Russia's central bank, we've spoken about that. The impact globally. So this doesn't just impact Russia, it obviously impacts everyone globally. So these are things that we consider when we look at portfolios and construction and so on. Without access to Russia's airspace, many carriers, I'm talking about airline carriers, will have to divert flights south while also avoiding areas of tension in the Middle East. So I'll give you an example. Finnish national carrier Finnair cancelled flights to Japan, Korea, China and Russia and scrapped 2022 guidance as sanctions block access to Asia. So and that was one of its cornerstones of its strategy, more to Asia. So that's had an impact. As a result, Finnair's share price plunged 21%, leading to a retreat in airline stocks in both Europe and the US. Germany's Lufthansa said 30 flights to Russia would be cancelled this week, and flights to Europe from Europe to Tokyo and Seoul would also have to fly detours. How does that also impact us here? Well, I had a client in here earlier this week who was looking to book flights to go to Europe, and she was looking last week and the week before. Those flights have increased in cost by in excess of $500 per week. Now, that's not necessarily purely conflict, but fuel prices will have an impact, and jet fuel will also have an impact in relation to that. Markets here, there's been an initial fall of about 3% last Thursday, but based on the increase that we saw in the markets yesterday, most of that has been made up. We hit an all-time highs back in August last year and January this year, but since then there was a 10% fall on the 27th of January, and that's been based on concerns about the Russian conflict. But also, if I bring it back, it's also based on high inflation numbers here, fears of interest rate increases and potential slowdown in growth. Year to date, the All Ords are down just under 5% versus 8.8% of the S&P and 12% for the NASDAQ. And finally, well, not finally, but the minutes of the US Fed Reserve meeting indicate that the interest rate hikes are likely on their way soon, and we're likely to see rates increase here. Now, how this conflict impacts rate increases here is yet to be seen, but the early information that we had was that rates could go up as early as June, keeping in mind they would have gone earlier. However, we do have an election coming up in May. Domestic reporting season that has come and gone, or almost through. Results to date have been modestly better than expected. The net positive surprise is coming from ASX 100 stocks. That's a positive sign. Where of the stocks that have been covered, 87 have reported to date. 28 or 32% have exceeded half-year earnings per share estimates by at least 5%, while 22, that's 25%, have missed their earning guidelines. So this is a clear sign that companies and corporate profitability is doing better than analysts had previously thought. And at the moment, what we're seeing is companies are sitting on significant amounts of cash, and they're not quite sure how to deploy that at this point in time. So that's a real quick update of what's happening around the markets and the considerations that we have.